Good morning, ladies and gentlemen, boys and girls, everybody. Welcome back. Let me turn that a little bit like that. That's good. $8.40. Good morning, non-stop melt up. Good morning, Crypto P. Morning to you, brother. Market non-stop melt up. Yeah, I mean, yeah, pretty much. Yeah, that's a good way of stating it. And yeah, for the moment, we kind of expect a bull market until about 2026. So even 2025. I mean, we'll see. But some cool charts online says the market should go up till 2026, and then we'll go into a bear market. So maybe we'll find out, right? But so far, market's performing pretty well in that approach. The market suggested from 2023, we're basically supposed to have a bull market from like 2023, 2024 to 2026. So far we're into 2025, and since 2023 the market's just been going straight up for the most part. So far it's been pretty much correct. So anyways, let me sit this up a little bit. Yeah, so right now, on the chart, it's, based on the time I've started this stream and what have you, this would be one of the kind of more of the, shorter term support levels you'd be looking at right here where it says pre-market support over under. So, this would be our back test. Oh, that's not right. You already know, right? So this would be your back test into pre-market support, and then there's your rally out from the pre-market support. So effectively, the overnight gap up and long that first took place this morning pre-market has support right about here. 605.60 to 605.57, which has continued up and obviously leading into the open here. Well, we still have 40 minutes until the open or so. But bottom line, the long is still intact from this morning pre-market. That doesn't mean you're not going to see candles go down. Just markets long into so far this morning. It's just a gap up. Markets holding support and moving. You wonder if they will split SPY. I would imagine probably not, but I guess you never know. Yeah, so I guess for the moment, as far as the market's concerned, we do have a big gap up, obviously. I'm going to flip this to a 30-minute chart. So it's a decent gap up. We'll see where the market opens at. Once the market opens, we'll start running some Fibonacci stuff for today's gap. But if we do have a gap and go and follow through, it just means the market's got price targets to the upside. If the market fails its gap and go, it just means it's going to pull back. That's generally the way the market works, right? Either it's going to go up or it's going to pull back, generally speaking. Very, very, even if it's consolidating, it's still just going up and down, but in more of a sideways motion. So anyways, we do have kind of an interesting setup in that regard, because you have the potential for gap and goes, gap pullback and goes today based off of what we're seeing. There is some economic data coming out today about 11 o'clock, 11 a.m., 10:45, PMI, some Fed speeches today, but mainly just like PMI, ISM services that come out today. What's it going to do to the market? I have no idea. But generally speaking, the economic data, when announced, is really it just gives the market a catalyst or reason to move the market generally to and from, a lot of times, volume levels that the market wants to move to, or important trends, so on and so forth. So, I think it's not necessarily it's less of how important the data is, but Again, when it comes to what actually takes place in the chart in real time when data is announced, it's merely just the market using it as a catalyst to move the market, and it's a lot of times to and from either be an SMA level, a Fibonacci level. Granted, if you throw a bunch of if you throw a bunch of stuff on your chart, eventually the market's going to hit something, right? So that's kind of the other funny saying, as you know, no matter what, the market's always going to hit something. Just throw a bunch of stuff on your chart, right? But that being said, again, we'll just use data as catalysts to move the markets to and from levels on the chart. So, even if it's, for example, let's say the market has a price target to the downside or a level everyone's trying to basically go hit on the downside, and it's not working, and then they release data's negative, they'll use the data to slam the market down to the support, right? Like, so say, like, for example, again, there's a support, just like you see on the screen here, right? So, see the pre-market support over under, right? Let's say, like, we wanted to go back and do a back test of that level. A lot of times it could be like staying up, and then we'll release data, and then data will be used to drive it down to that price, right? So it's like it kind of shrugs it off until we get a catalyst, and then the market will go. So anyways, so yeah, so that's kind of that. So again, to look at where we're at, that pre-market support over under. I would say that's one of them. The next level down is right here. So then again, with the way the market's kind of moving, I had to move up support today. But in the event, let's just say first shelf breaks, then we would be targeting down to the next one, 605.38, which this could change a little bit. Again, so it's very similar to what we did yesterday, right? Kind of. But yesterday we actually broke down support first and then had to re-break up. So a little bit different. So so it's not entirely the same as yesterday, but same tactics. So, yeah. I feel like I've repeated myself saying so a lot, but, that's kind of it. I need to open up something else. Hopefully it doesn't screw up the stream. Oh, good morning, Anthony. Good morning to you. We'll get into Bitcoin a little bit here and the volatility index in a second or two. Thank you to all of you guys that are tuning in this morning. Really appreciate you hanging out with me. Fun times, fun times. Okay, let's see. Bring back up the stream. That's funny. Clean shot right there. Hilarious. All right, so we're going to get into the volatility index next. Where is it at? There you are. I haven't actually looked at this yet this morning. So, give me just a second and get everything set up the way I want it set up. And then we'll bring it over to the chart. Yep. Well, I guess that kind of makes sense. All right, so bringing this guy over. So we'll kind of flip into this chart first. We'll take this guy, go to a 15 again. So this is going to be very similar to the stuff that we talked about yesterday, in the sense that yesterday the market, let's just say, tried to break out. Hindsight's always clear. but, looking at it now, it just basically says market went up, failed its breakout of the 15-minute, stayed into a downtrend, right? That would be the hindsight. Now, in the moment when this is all taking place, it's like, okay, well, we're going to hold support, we're going to backtest, blah, 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 blah. But ultimately, market stays below 15-minute 50 SMA and remains into a downtrend. So we don't even really get that early precursor of volatility, right? Yesterday, we really just rejected and stayed into a downtrend. And then this morning, you see the market's gapped up. And so, and it makes total sense, right? And even in the title of the video, right? If you guys look at the title of the video, it says stock market today, market's in a buying operation, right? So, generally speaking, the title's the exact same as it was yesterday because the market is the exact same as it was yesterday. I think the title of the video has been that way for like almost the past week or so. And so as long as the market's in a buying operation, the title pretty much remains the same. Now, on days where you get some, but anyways, yeah, if we're in a buying operation, the title will say buying operation. If the market's in a selling operation, then we'll say selling operation. And it's merely there to emphasize that that is currently the trend of the market. Sometimes the trends will last longer than others, but yeah, the market's in a buying operation, and there hasn't been anything to signal us or tell us that that's going to change. Anything can happen, but what hasn't happened is the market has not signaled to change from the current buying operation to the selling move. Yesterday we had a little bit, yesterday the market was testing the 15-minute, which basically just says maybe the volatility index was going to change a little bit for us, and if so, that could have started something different on the market other than a buying operation. But that failed its 15-minute trend and resulted in a downtrend. So all we're getting at is, first level here, 1346 or so. 30-minute chart here, 1378. Take this over to a pre-market chart so you can kind of see it where we're currently at. So until the market, so now, and remember yesterday it was about here. So yesterday, where I'm putting this line at, right about there, yesterday this is where the 15-minute trend was, right? Flirted with it, broke back under, stayed in a downtrend, all right? Today, this level is now down here. So we've changed where it's at. So now it's actually 1346. And that's going to continuously change too. But for the moment, 1346 is the current level that I would be watching for the VIX to recover. So at some point, whenever the VIX wants and it starts to bounce and it recovers, and it goes and it breaks out 1346 for the moment. And tomorrow that would probably be like 1340 if nothing changed. That's where we'll start to look for to look at bearishness on the market. Not trying to necessarily pick a top, but once the 15-minute VIX volatility market starts to wake up, volatility might start to come back a bit, and then in that case we might start to look more bearish the market or have the assumption that could start being the case. Otherwise, the market stays doing what it's been doing, which is going up. All right, so if we real quick just flip this back to SPY. Yeah, one second. Sorry. Good morning, George, Randy. Good morning, guys. So yeah, we're gonna flip this back here. So real quick, again, SPY in a buying operation over the 50 SMA. All right. You go take a peek at the VIX. VIX 30-minute chart in a selling operation. So until we see the 15-minute start to get positive on the VIX or the 30-minute start to get positive on the VIX, we don't really consider that the market's going to be kind of rolling over or acting like that. And until the SPY enters a buying operation, or a selling operation, it's just a buying. Yeah, it's just a buying operation, right? So as long as everyone's clear, that's the current path the market's still on. It's in a buying operation. Until that changes, it again hasn't changed. Now what you're seeing, so that's still short-term stuff, but not as short-term as this, right? So this pre-market support, right? So that's going to be used as like an intraday momentum level, right? So pretty much market gaps up, create support right here, bounce, 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 right? So it's just used as a short-term intraday trading level based off of everything that has happened pre-market from, you know, here and back. That you guys are like, what are these dumb drawings? I understand. Let me redo this. I'm going to take this box, and I know I do everything in yellow, so I'll just make this blue. Settings, blue. There you go. So everything that's taken place, it's actually before that too. It's more like, it's realistically like here. Yeah, that would be better. So everything that's taken place from this blue box creates a support right about there for the intraday price action. So everything that takes place earlier pre-market creates that support there and blah, blah, blah. All right, cool. UHC CEO has been fatally shot. Wouldn't know anything about that. Hold on, give me just a second. Doing a couple things here. Theory, that would be a gap too. Yeah, sorry about that. So, yeah, I guess when I see something that makes sense, I'll let you guys know. Other than what we've already seen so far. What time is it? 9:05. I guess it's still early. I did hop on a little bit early there. Where is we're going to look at Trading View, Bitcoin. All right, so wait a second. Yeah, for that, no, that ain't right either. Either way, we had put some support on the market for Bitcoin down here. That was the daily support. That bounced. Not really much surprise. So right now, I would say, you know, something that's relative. It's not even that important. It's just in terms of short-term stuff that would be relatively entertaining for you guys to watch on the stream, I guess. Again, this was what we talked about yesterday. This was that bottom support we had mentioned as soon as we got on the stream, and then talked about the pullbacks and where they could go, and then expecting you should get the 30-minute pullback here. So you got your 30-minute pullback, and that's sustained, so you're coming back into that. So you're basically coming into that 30-minute volume weighted average price support that's been created from previous day, or well, that previous low yesterday. The only difference is you have a bearish chart structure coming in the 30-minute, as before it was up and then higher lows. Now you have a roll scenario coming into it. So this is actually where you'd be looking for like a bounce to like lower high on the 30-minute or something like that. You know, it's very, very irrelevant stuff. Again, the only thing that was really that important yesterday with Bitcoin is the fact that we hit daily support down here in the 93,000s and talked about that being a tradable bounce area. Also that we kind of expected this would fail and continue to roll over a little bit. If it happens, whatever. If it doesn't, again, it doesn't really matter. But this was a big support, decent support that we came into yesterday on Bitcoin. So, we still, they could have changed. Let's see. Let me take this off here. The price projections for Bitcoin may have updated slightly, but not so much so that it would make a huge difference. That would probably be like next week, if anything. Yeah, it's still all about the same, 118,000, 119,000 to 132,000 right now on the euphoric run out. So, you know, if we're going to see real euphoria on Bitcoin, then we're going to need to see the prices up here. If they get up into about here, then the waitress at your favorite diner down the street's probably talking to you about it. So, you know, up into that area where the blue box is at, again, 120, 130s. That's where we'll start getting, you know, what I would consider like true euphoria of this move. You know, side note too is yeah, pretty much if we, if this market can't sustain its gap and go today, so either it doesn't want to gap and go. So again, there's really three ways I would look at gaps for the most part, whether it be a gap up or a gap down. It's either gap and go, gap pullback go, gap pullback and just fail, right? Gap has no meaning. The market, whether it goes back up, fills the gap, goes further than that. But it just doesn't respect the gap. There's really three ways, right? So it's either gap and go, gap pullback go, gap pullback, and it just ends up not going at all and just fails the move. All right, so in the event we do a gap fail, whether it attempts to go, then fails, or just fail, whatever, right? Fail. Price target destinations are obviously going to be to the downside. Which for the moment could be as low as like 605 to, or yeah, about 605 to, you know, $604.80 something cents on the SPY. On the QQQ, it could arguably be as low as 519 to 519.15 to 518.79. Hopefully that was making sense. And I was, you know, I know that's kind of a wishy-washy scenario, but we do have reasons to look as far as, you know, those prices down for the moment. And then as far as some of the targets up, arguably we're going to want to wait till we get into the open to run a gap and go kind of scenario on that. I guess if I had to do a little bit of an estimate for the time being, I could do that. So if the market was successful in a gap and go today, we would be seeing prices close to, if not higher, a little below 607, 607.33. Yeah. That would be on the SPY. Obviously, we want to see where SPX opens up at because that can be a little bit more accurate in the telltale there. So yeah, again, we'll just see how the market shakes and bakes and what the market internals look like when you get into the open. Wow, really popular chat this morning. Really popular this morning on the chat. So we'll flip this back to extended hours real quick. But what was that? No idea. It's all good, guys. I'm just joking with you. Steve Cup, Eugene Perini. Good morning. Stocks only go up. Yeah, when they're in a buying operation, again, it's more likely you're going to see stocks again go up. And I mean, there's zero downtrend in the market right now. There is no downtrend in the market. So I know it, no matter what you look at, again, whether it's the daily chart, the 4-hour chart, 2-hour, 3-hour, 1-hour, 30-minute, they're all uptrending, right? The only thing that's have been flipping is like maybe the 15-minute, 5 minutes, things like that. But as far as everything else, the market's just in an uptrend. So again, they should go up, right, when you're in an uptrend. So it's not like what we're seeing isn't normal. Granted, it's been on a heater for a long time, so stocks pretty much only go up at that point. But yeah, I mean, we're in an uptrend, so the market doesn't really have reasons to be going down for the moment. That has nothing to do with short-term movements and yada yada, right? But as far as the market's concerned, there's no reason for it to really go down. As far as technical analysis trends suggest. Yep. I mean, I mainly just use the 50 at this point, but because again, like I just kind of visually know where. I don't want to say I visually know where the 10 SMA is. I don't know that, but like right now it's not on the chart, but yeah, a lot of times I'll still have it on the chart. Some charts won't have it because again, really the moves always start from the 50 SMA. The 10 SMA is kind of there as a secondary measure. But the main one would obviously be the 50. So I can basically just look at a chart simply with the 50 SMA now. And that pretty much be enough as far as that goes. But there are some things that I do miss when I'm not paying close enough attention to the 10 SMA. So I'll put that back on. So a lot of times used for like short-term pullbacks, things like that. No, I own rental properties and make money that way. Made money through some sponsorship deals that are still ongoing from the past. So no, trading was not and is not the only means of income. For most people, it's never going to be their only means of income. Very, very, very few will have just a sole means of income from trading. For a while, I did have a great income from trading. Could just basically live off that, no problem. That was a couple years back, but then I've hit my slow part of trading, unfortunately. So, giving back a lot of money in that regard. But yeah, so again, most people, and now being on an investor and trader and doing analysis for 10 years now at least. Yeah, 10 years, maybe coming on 11 or so. But 9 years easy. So now I've gone through highs, lows, and kind of mellowed out in that regard. And, kind of the trading circles come full circle, like when you kind of read the things in the book. So, again, the reality is after making good money, losing lots of money, and seeing a lot of that come full circle, especially like you kind of read in the books too. Again, it's just the reality is like most people will not make money, and then most people over the long term will even experience something like I've experienced, where we've had really great highs and really big lows with it, and then it's all just kind of in the end balanced out, right? So it's kind of like I've seen a lot of it come full circle. So again, if you see somebody else on YouTube and whether again, any of these streams that you're looking at, they could be at a very high point, they could be at a very low point in their trading. So that being said, just always know the reality is most people will end up losing money in the end. Or if you are making money, it's not going to be an exuberant amount. If you're making a lot of money at one point, you got to take some of that and do something maybe a little smarter with it. Luckily for me, I took a bunch of money and put some into real estate, and then got real estate properties, and now I have cash flow that comes in from those. That's more passive, so it's more like a dividend at the end of the day. So that would be kind of like my take on it. After sitting around looking at computers and investing and doing it all for 9-10 years at this rate, like every day. Or you could be like my business partner, Brandon, who, never seems to lose because he's like a robot. And that's what I'm saying is he would be like the very, very few, right? He's crushed it for many years ongoing, very consistently. So, and he would be like a part of the one, probably like the 1%, or like the very, very small percent of traders in that regard. I think partially, what time is it? 9:19. Okay, we're good. I think partially it's just maybe getting older. Maybe that had something to do with it, because I was pretty much like had no problem taking on risk when I was younger. And I think that was arguably because, as you're building and making things and all this, there's more like less to lose maybe. Maybe that was it, then as I get a little older and I'm married and I have properties and, and then you're looking at having some kids and just, maybe the growing up and becoming a little sissy. I don't know, right? So something mentally changed there where I lost confidence and conviction sometimes, or even when I knew I'd be right? I put on a trade and get like weaseled out. And so just like something psychologically changed there. And I think that was just kind of the going from younger to older. Maybe there was a mental shift there as far as responsibility goes. So maybe became, just less risky in a highly, call it risky environment where you have to have extreme conviction, take things on pretty early. So just in that regard, I think that was a mental shift for me. I think that played a role. But after, also making a decent amount of money and then going through kind of a slow period and getting hit, that will also help you lose some conviction too. So I think it's just kind of like a snowball effect of all of those things. And it's funny because as the years have gone on, I've gotten substantially better at analysis and understanding how markets are going to work. But once you lose the mental or the psychology of it, the battle is significantly harder. So I think so as I say, like, it's going to be like a huge mental game trading. That's always the biggest thing with trading. And so So no matter how much you know or how much you learn and how much you can even predict something, you have to have the mental fortitude to either wait a trade out, go through a trade, all these things, right? And when they're firing and they're all clicking, making money trading is it's easy. It becomes easy, right? But if you lose that, and then the mind games come in, then it becomes very challenging. So I've gone through, my mind didn't matter, was in the zone to out of the zone to back in the zone, right? And so it's a very challenging thing. So yeah, I guess that's my whole spiel and take on it there. So so yeah, I mean that's the trading environment, and so it's an easier thing for younger gentlemen to get involved with, just as I did, and that's mainly because you don't got nothing to lose at that point, right? You're just trying to build yourself, trying to grow, trying to make money, right? So when you're younger and you're finding and seeking and building, right, it's an easier game to get involved with. But then as you get a little older, more established, more responsibilities, right, it's the whole concept of risk averse, risk on, risk averse. So whether you're more risk on with your account one day and because it's up, right, or vice versa, as you're getting older, no, you're always going to be becoming more risk averse. You're not going to go skateboarding, you're not going to go snowboarding because you can't afford to break your ankle and then not go to work and pay the bills for the kids, right? So no matter what you do as you get older, you just naturally become more risk averse in everything because responsibility, can't afford to break your leg, or shit, I can't, screw up my account now because, now I got 4 or 5 houses, or whatever it might be, right? So I think you just naturally become a little more risk averse as you get older, in pretty much every area, and then add that into trading, and you can kind of see where we're getting at. So I'm not really, like I said, that's pretty much the reality of trading. And if anybody, especially now, if anybody says differently, it's, either they haven't gone through the full cycle of the highs and the lows, and they could just be riding a high, or, they're just complete savages in the market, and then that's just, it's it. But I would say for most people and most traders have gone through enough cycles that should be pretty close to the story you'll hear. And then, like I said, like my business partner, Brandon, the reason he runs the live trading portions of it, is because you want someone who's going to lead you into really good trades, have that conviction himself, right? And then super consistent, right? So that's our guy, right? Brandon is like top notch when it comes to his consistency, mellowness, behind a trade, things like that. And then I'm just, kind of on the back edge of that, and just really I pride myself these days on analysis and being able to give foresight analysis into what's most likely going to happen for the day. I do enjoy that. I do pride myself on that because that's a part of everything that I've worked towards, especially as far as the markets go for the past we'll just call it 9 years, 10 years, right? So yeah. But again, so I have some rental properties that cash flow really well. We'll probably continue on with those. And yeah. And then I might even transition in the financial space. I've debated becoming a financial advisor and, actually doing some other things within the space. Because as I get older, it's just kind of that concept, it's like, would my expertise be more valuable somewhere else? We'll see. So there's some changes that might happen with me. I don't know. We'll see. But so far, really, I've enjoyed everything that I do and currently do. And how damn good, the analysis I can provide for people is kind of mind-blowing, I think. Planning on but there is a big trade I've been planning. There is a trade that I'm planning that could be, if I do it right. I've been planning for a while, and I think, anyways, but there is a big trade I'm setting up that I think if I do properly should bring in a lot of money. And at that rate, I don't even know if I would become a finance. I might just chill. So there is something I'm planning in the works, and if I lose, then it's not like my life is, over. It's just like, well, I'm back to the drawing board, I guess. But there is a trade that I'm setting up, couple. And I think, like I said, if I do it right, patient enough, wait it out, I think it could be a mega return. So we'll see. Probably not. Not getting my hopes up. But if I am right, then I'll be right. I was gonna say, Brandon, I think, he did say that he, I don't want to speak for him in that regard. Again, the man's not here. Not that I'm saying anything negative or bad, but it may be something that he would like to, share differently than I could share for him. So I'll just leave it at that. But yeah, he knows his jam. And but anyways, let me kind of get into the zone here. All right, so pretty much we're targeting right now this pullback down to like probably 605.50 for the moment. We still have to get under this first pre-market over under. Actually, that could be a little different now. Hold on. No, it's about the same. That's good right there. So again, the main support over under for the pre-market systems down about 605.50. We're still holding above the pre-market support here, blah, 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 yada, 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 obviously. Again, if we get some weakness into the open here, a couple minutes, the first thing we're going to basically look to do is bring this market down towards that 605.50. And then that's still support. So like as we're coming into this area, it's still support until it's not. So it might get caught up with a little bit of a bounce and then maybe it breaks. But, like we said before, and for those that kind of pay attention to the stream, you guys are pretty, I would say, fairly up to speed on some of this stuff. So we'll just take that out for now. Again, that's the main pre-market support over under. If we start to slip that, that's where we could see more additional speed. So it's kind of like, again, whenever we're coming into the open and what have you, we'll probably look for pullbacks to like this. And then in the short term, in the micro, there would generally be a little bit of a long pop that could turn into a long bias trend. So it's, again, I know it sounds dumb, but this is pretty much it. So it's your pullback target, and then this is your over-under support, right? And then or breakdown. This is one of those days where the setup isn't like entirely perfect for the pullback, but you get the point. And the reason being is because we already had a solid dip here, right? So normally we would look at a pre-market low type jam, but since we already had a nice dip here, we would actually look for support here first. So you see how if the market doesn't pull back and it keeps going up, we kind of chase the price up a bit. So this would be where our current support level's at. And now it's in the finite, or in the minuscule, sorry, it's about it's a matter of really slipping this, then going down to here, etc. So this is still kind of like and I'm not saying these are the be-all, end-all targets, but like that's generally like that's what we look, and that's why we said like this was support in the morning, right? So earlier this was support, right? So you bounce it, bounce, and now you're rolling into it again. All right, so look at the formation, right? So you're going all up, and then you're back into it here, right? So, and then you snap it. There's your target. Doink. Okay. Not too shabby. You see how you just instantly get sucked up there? Again, that's some high frequency stuff. Now, yeah. Let me stop talking for a half a second. Get over to here. All right. Bing, bang, boom. Like it did, like it did. Bing, a bang, a boom. All right. I mean, that's a pretty big one. I don't know if we're really going to do that. If for whatever, that's too big. I don't know. We'll see. That might be a tomorrow thing, but right now the SPX gap and go target is up to 6,081. So basically, if this gap doesn't fail today and actually was successful, we would see the price up there. That's kind of a big one. I don't know if we're quite going to get that. So not going to really play for that for the moment. Therefore, we'll probably be looking for maybe even some more pulling back. 1 second. Loading up the market internals right now. Okay, so what do the market internals say? They say nothing super conclusive for the moment. It would so far suggest I was gonna say it wouldn't suggest that the gap and go is in effect quite yet, or like a gap even pull back and go. The market isn't quite running. It's only been open for 2 minutes, so it's not like, you know, that means a whole lot, right? Yeah, 2 minutes. Okay, so again, there's your kind of first initial buy up long off of target pullback, pre-market support. The market internals are going long right now. They're not bearish. Well, yeah, I mean, I'll show you what I'm looking at, right? So if you look at all of these screens, you can see that most of them are either kind of sideways with a big green candle or breaking up a little bit with a green candle. Aside from the FANG names, the FANG is not doing that, right? So the FANG are kind of sideways a bit. So it would be nice to see the FANG names kind of pick up if you want to keep the long going. Again, it's kind of neither here nor there, right? Whether the market wants to go up for forever or whether the market wants to eventually pull back, again, that's not really, you know. But if you did want to see the market keep going up, then you're going to want to get some participation here from the FANG names, which isn't necessarily happening. I mean, it's kind of happening, but not really. All right. And obviously, if you guys look at QQQ, you can see QQQ's lagging a little bit of SPY. Maybe not a ton. Actually, 1 second. Yeah, I mean QQQ may be lagging the SPY just a little bit, but again, that's because you're kind of slow. I don't want to say that's even slow. I mean, that's some decent movement on those candles there, and they're popping up a little bit. But you can see, right? You can see green, one red candle, and then up with those FANG names. So that's kind of helping that Q's bounce a little bit. So again, market internals right now are, you know, for the most part, kind of slightly on the long side. But those can all change pretty quickly, guys. It's not like that's, you know, the be-all, end-all. All right, so currently the pullback, maybe even a little higher than that. Let's run up 3 on this one. So currently the 1 minute pullback structure, it's kind of wide, but hell, it could be all the way down to there. Okay. I'm going to take these lines off here. I don't need them anymore. Again, the 1 minute pullback structure based off of the SPY would be starting here, 605.75, hence the red pullback, and then one little 1 minute green candle. But yeah, you get the point. Again, so that's that first initial pullback to target, then an initial support, etc. If the market's really going to give up today, right, and have any sort of pullback off this gap that's meaningful, arguably you're going to need to break down that level. So basically what I'm doing now is just watching market internals and a couple other random stuff. You can see here, like, you know, the SPY issues are kind of slowing down a little bit. They're kind of going through a pullback. right? So does that get worse? Do the FANG give up, etc.? But right now, the FANG names are holding up pretty well, right? A lot of those big FANG names are holding up pretty decent here. The SPY market internals are currently rolling down, so this is kind of a situation where if the FANG names give up, then the market gets taken. But for the moment, everything looks okay for it to stay upsided just yet. Interesting. Again, remember those FANG names, or sorry, the SPY issues. Ready? Look at the SPY issues here. Oh, wait, you can't see that. Sorry. Again, you can see the SPY issues on the right here. So if you look at the SPY issues, look at how on the day they pushed up and rolled all the way back down to low of day, but the SPY still isn't at low of day, right? You see that? So see how the SPY issues have already rolled over to low of day pretty much, but again, SPY hasn't. So that, again, the SPY is not looking bearish. Even though it hasn't been printed onto the SPY chart, the internals are not suggesting it's long bias for the moment. You can kind of see that, right? And if we look at, the NASDAQ 100 issues, the NASDAQ 100 issues are already below the day's lows. The QQQ is just now at low of day, okay? So the market's not looking strong here as things are kind of rolling a bit. And now we know that one of the last things that's still holding up are the FANG, right? Amazon, Apple, Google, Nvidia. So if at any point these get weak, the market gets shit on. Okay. And now we know where the over-under support is. It's the bullseye, right? So basically, you're looking at these FANG names, give up some weakness, and then the market should get smoked. And when I say smoked, really just kind of roll over and maybe have some more weakness here off today's gap. It's really just a matter of those FANG names. You're going to need some weakness across those guys. And if so, you'll see the market give up some more. If not, we'll see. But again, you kind of need the FANG to get a little red here, and then the markets can pull back. Otherwise, sometimes, like I said, we'll just basically dilly-dally and hold the support over-under, which is that target. Hence being why the first target of today's pullback was down to the target, right? Because then you can get bounced into a support. And then the market hasn't actually broken down because the breakdown would be below the target, right? And then you can see how the chart structure is all set up. You see how through the pre-market? So if you're going to get a breakdown, it has to be below the target, and then you'll take out the shelf. And then you can see you have your little head and shoulders, all that jazz. All right, so you just got your first kind of red candle on the Qs. The momentum isn't, or sorry, Qs, the FANG. The momentum hasn't shifted bearish yet on the FANG, that is, right? So if I bring up the FANG for you guys real quick, you'll see it. All right, so you see how we just had a pretty beat red candle. You saw the Qs go down, but the momentum hasn't truly shifted to negative on the momentum of the FANG. So to me, the drop isn't still, it's still like early. But yeah. Let's take a look at SPX. Let's go to the 30-minute. 10 is all the way down to there. Interesting. It's not like we've tagged golden pockets of anything yet. Okay, ladies and gentlemen, boys and girls, again, you know, can we get a thumbs up on, maybe like a thumbs up or a little smiley emoji on the first target, basically pullback to long support on the day that was mentioned? Can we at least get a little, little thumbs up there? Not bad, right? Just one of the largest globally traded ETFs in the world, and here we are putting little target emojis for you guys, almost 2 pennies. I mean, that's pretty fun, right? That's good stuff. That's good stuff. You're not supposed to be able to do that, guys. Remember, you're not supposed to know those things. Anyways, that's fun. It doesn't always work that clean, but that was pretty good. Not too shabby. All right, so again, looking at the market internals for the FANG, they're not bearish. They haven't given up. They're actually still holding up pretty good. And we're kind of going through a couple little, again, it's just looking at the market internals, you can see it. A lot of major market cap stocks are still up. We've got some weakness on the SPY. You got some weakness on the NASDAQ 100. And the long press has stalled out on the NASDAQ and the New York Stock Exchange. So stocks aren't advancing. Yeah, that's a better way to say it. Stocks are not advancing that well across the New York Stock Exchange, the NASDAQ 100, or the S&P. The only things advancing this morning have been the FANG names for the most part, and those have kind of chilled out, started going sideways. So if everything stops advancing, and then the major market cap stocks like the FANG stop advancing, then what's there to keep the markets going up or hold them? There isn't much there. So, side note to that would be, if the market internals start advancing, then you're not going to see this slam down quite yet. Joe doing very well, doing pretty good. Speaking of, what's Bitcoin doing? Hey, Bitcoin with the pump. Gotta love it. Take that off. Gonna take that off, and now. Real quick, right? You see this last little turn up for the FANG. You can actually see how the MAC was kind of getting close there. So in your mind, you know that there's some people thinking it's going to roll over, whatever. But then it ends up boosting up there into a long, right? And then if you look at the Qs, right? So if you look at what just happened with the Qs, so let's do that. So look at this setup, right? So you can see how the Qs were in a little bit of a dip here, going down, and then they kind of grabbed into this long and started pressing up. And if you look at the FANG, right? So you can see the Qs was actually going down a bit against the overall direction of the FANG, right? So FANG names have been leading up today. Meanwhile, the Qs was actually going down, right? Granted, you can see this last little turnaround and pop has been kind of accompanied by this little push on the FANG, but nonetheless, you can kind of get a clear picture. Now, if the FANG were going down today and having weakness, then the QQQ would basically give up, or at least be going down, right? A little bit easier. Okay, so look at what we're seeing here. We're getting a rollover on the SPY issues. See the rollover on the SPY issues. You can see that little roll on the SPY. Again, you're getting a little roll on, you're getting some declining issues on most markets there. Is it going to be enough to really roll the market off this gap? We'll find out shortly. Oh, yeah. What time does it come out? 10 o'clock? Wasn't it supposed to come out at 10? I think it was supposed to maybe 10, maybe 11. We'll find out. Remember, guys, the market is not broken down. It's still over support. Remember this little target yellow line was and is pullback. First desired pullback into open support, and then the market's going to decide. And so let's see what time we have until here. Okay, so 10:45 is when PMI final. Oh, come on, where is he? Yeah. Anyway, so about 10:45 and 11 is when we're gonna start having that data come out here. So this thing just honestly might just chill out and just basically no breakdown till 11. And when I say breakdown, it doesn't have to break down by any means. The market's in a bull, we're in a buying operation. In the intra, the short term, there may be a need to pull it down, but again, we haven't broken down. We're still basically over support, as we mentioned. And when I say we're still over support, it just means that, again, the long move that started pre-market is still intact, right? So everything that happened this morning, this long press, this move up, has created support right here. And as long as the market maintains that, you don't get that breakdown, right? And then as far as, well, yeah, and the other thing too is today's gap and go just seems too, seems too big. I feel like we've been on too long of a run for this thing to gap and go to the target of 6,081. That's why I'm kind of leaned on this like pop to short roll and fail. I could be wrong. We'll see what the data brings, because again, the data could very easily be used to tank the market down to targets or run it up, and we'll find out. But I just don't. I don't know. I just feel like the gap and go doesn't quite make sense. And so far, the market internals don't really. The market internals don't suggest gap and go. They suggest kind of gap and fail, because again, not entirely. That's not entirely true. But again, if you're going to get a gap and go and, whatever, you'd want to see SPY issues running, NASDAQ 100 issues running. You'd want to see these things advancing significantly better than they're doing right now. So that would have to change, and they're just not. So, and I don't think the market can gap and go that far just off the back of the FANG name. So there'd have to be some significant turnaround on some other stuff. Actually, should issues be negative there? Kind of positive, maybe negative. What about these guys? Positive. That's what they want you to think. Well, I was gonna say usually the gap and go tactics for SPX work about 70. I'd have to count it again, but it's anywhere from 70 to maybe 75% of the time, I'd say. Then again, when the gaps get really big, it's going to be harder to achieve. So there's different market circumstances, right? So it's like, how are you going to get the market to gap and go super far on a day where, market internals aren't quite running, or the market's already been on a long press for weeks now? It's easier to do a gap and go with the big gap at like the start of a buy signal, or the start of like a new long-term trend, you know, coming up, or a break above some sort of significant resistance. That's usually when you're going to have an easier time doing that. Bitcoin, yee. Again, still, we even in this situation, you can see real quick, right? So we've had a situation where the momentum has turned, well, some momentum's turned a little negative here on the Qs, and the price action keeps creeping up. So we're getting a divergence amongst price and some of the MAC momentum there. So we'll see if there ends up, you know, basically price action ends up catching up to the Qs here. And if so, we'll see the Qs kind of roll a little bit. But right now, like I said, we're seeing the FANG names hold up really well on the day, advancing decently well. Therefore, we're just, markets aren't rolling. They're just basically holding the support, right? So, and you can see here on the screen, main pre-market support over under, right? So far the market's performed very well. I mean, it's pretty much pulled back to the expected support, bounced, and now the market internals so far have suggested no breakdown, right? So the market internals have not been bearish enough coming into here, or since it's bounced, to roll the market over and break it down. That just means that the current buy signal and everything is just up for the moment, right? And that could change. It's, again, like I said, it's when you're in a buying operation, it's not like you're looking for the market to just break down and go down. You're actually looking for the market to continue going up. But of course, you have to sit on the, you know, the fence and go, okay, well, it could break down if these things happen, and those things have not happened yet. And when I say break down, I mean this is still all intraday short-term stuff. Let me double check our SPY because this is wrong now, I think. Yeah, it's way wrong. So let's see. The 161 target for the SPY today is $606.74. So if we do the successful gap, go and reach our targets, we should get the SPY up to about 606.74 and SPX again into 6,081, right? So again, if at any point today you do end up seeing those prices, again, it's totally normal. Does it happen? Again, I always get a little bit more skeptical on the big gaps. When they're small gaps, I would usually kind of guarantee, now I say guarantee because that's stupid, but you know, when the small gaps are around, it's a little easier to achieve those. When they're bigger gaps, I'm always a little bit more on the fence, but then again, the reward is much higher in a big gap if you do get it to work. See, like, even look at this day back here. This probably worked, right? So you can go to this day here on the SPX. You see how we gapped up? That was a big gap up, right? So on that day, I'd be a little nervous of going and getting the 161, and you can see we shied it on that day, right? If we go to this next day here, right, it's a smaller gap, but this one, again, similar. We got very close to 161 here. On this day was a small gap. Of course, you got it. We could go back to even like this one. Here's a good one. So like here was a gap down day on the SPX. So market gapped down, and that day we ran down, got the 161 and more, but also we like just started a sell signal, right? If we go to where we're at today, you know, this buy signal started all the way back here. So this market's been on a buy signal since here. We had kind of a new bounce here, and now we're here. But again, the gap and go continuation would be 6,081 on SPX. Let's take a look. So Apple's been up, Nvidia's down, Microsoft up, Google up, Amazon up, Meta up sideways, Tesla coming up, Netflix, yeah, okay. Good morning, everybody. Good morning. Again, you know, it's just one of those things I'm watching. I don't know. Let's see. 1, 2, this would be 3 area, possibly, yeah. And it's, we have negative MAC on the FANG names. The momentum is increasing down on the FANG names. You can see we're starting that little bit of a pullback there on the QQQ. So again, it's dangerous to be going long the market here when you can clearly see that the MAC is opposing that, right? So it's like, is the MAC lying? I don't know, right? But bottom line is this would not be like a grade A long setup here on the market, because you're buying into the Qs while the momentum is all going down and arguably increasing down. You shouldn't be long that. If anything, you'd want to be doing a little scalp short on that top in that moment. That's tough. So like even still, like market internals aren't really, again, it's not like we're not just getting an easy trend day on market internals or the market. And again, it's like you can clearly see, I mean, SPY up, down, sideways, NASDAQ up, sideways, NASDAQ 100 down, sideways, NYSE up, flat, down. The FANG names rolled a little bit there. This is, you know. Whoa, big rollover. Wee. That's so weird that on there it was saying not 10 a.m. I don't know why that would be the case, but that's weird. Anyways, there's your ISM service numbers, tanking the market. Again, not really a big surprise there. And we had mentioned that the market internals are not suggesting that the market should just be blasting up long for the moment. Again, your momentum and MAC on the FANG names were a little bearish there and rolling, so it's just not arguably the moment you want to be going long the market. That being said, the SPY is still holding support, right? So we haven't quite broken down yet. I mean, when I say holding, I just mean we're on it, right? So you can see this is main support. So you can even see how the ISM announcement went straight down to the same level, right? And the market's still not broken down, right? So if they're going to do a really scummy move, they're actually going to bounce this right here. Trap everyone that just went short, bounce them out again. Totally common. So again, everyone who chased that candle down ISM into the support level, which they most likely don't even know exists, and then get bounced out. Okay. So, what about the VIX? Has this done anything? Not really. Well, obviously it's low, so it really shouldn't be doing all that much. Again, this is definitely where the market internals are going to matter. So, the market internals aren't really, I would say they're not really selling off with that news. I mean, the FANG names are definitely downsided right now, so if that persists, the move would persist, but yeah, I mean, it's not like that. Even that ISM reaction has true meaning to it for the moment. The market internals aren't really going down with it. They're kind of mixed. Some SPY issues are going up. Some NYSE issues are going up. Nasdaq's not really selling off with it. The FANG names are kind of just chilling in the immediate. So it's not even like this ISM thing really is super bearish for the moment. That is, again. And also, do remember, right, though the ISM announcement brought the market down, remember, the market's in a buying operation. So again, you may have this economic data that just came out and knee-jerked the market down, but you're still in a buying operation regardless. And you're still over today's current pre-market support. Now, this doesn't mean you're long bias. I'm just saying that that's just kind of the concept. You can clearly see now, if we zoom out, kind of where you can tell there's been volume created in the market. Bounce, 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 hold. All right, so that's your main over-under. I won't call it your main over-under, but a relatively important spot. Again, I mean, I can't. I guess I don't know. I feel like there's not a whole lot more to say. Again, you got little bounce here on your FANG names. That's preventing the Qs from just rolling down right now. You got a little weakness on your SPY issues. Again, it's not enough, in my opinion. You have too much in the immediate right now, in the moment. You have the FANG holding up too well. The NYSE is holding up too well. QQQ is holding up too well. There's too much holding right now to really give up that SPY right now. So again, for what it's worth, hope that helps. Now, of course, all these things can change pretty quick. I mean, it's not like everything's really bullish. It's just, it's not extremely bearish and it's not extremely bullish. It's just kind of like, eh. So like, look here, ready? So like you see this chart here that I'm hovering on. This is the SPY, right? So you can see the SPY is actually more bearish than like, say, the FANG, right? But the FANG's market cap is so big that even with this being bearish, if the FANG aren't really rolling, it can prevent the market, so I'm saying, like, even though the SPY issues, the S&P 500 composite advancing issues and declining issues look bearish and are moving bearish, right? It's not breaking down the SPY. Why? Because the major market cap stocks are currently long, right? So they're moving the opposite, and their market cap is so strong that it's preventing the fallout on the S&P issue. So, when you're looking at these things, you have to understand like what sort of market cap each includes and how much of a way that's going to have, and then that can help you kind of navigate a little better as far as what you're seeing, why you're seeing it, and so on and so forth. Yeah, I haven't done them on Ethereum. I'm a little skeptical on. Hold on, let me just. Whoa, wait a second. Do they have it? No shit. I kind of forgot that they put the Ethereum futures on Thinkorswim. Hold on one second. I will look those up for you. Oh, Ethereum's going up pretty good this morning. I mean, that, dude, I mean, you know, hold up. Never mind. I'll do that in a second, but let me do this deviation stuff for you. Oh, that's not what I wanted. That's why. Again, watch out for, again, the SPY might get picked up in a little bit of a bounce there. Do be careful. It doesn't look great. I'm just, actually forget that. I'm not really paying attention to what I need to be paying attention to, but I just saw the Qs move and I'm like, maybe SPY is going to get picked up on that, but yeah, you know, I wouldn't be, you gotta be careful there. What the hell is going on here? Why isn't this working? Okay, so as far as Ethereum goes, so basically Ethereum's euphoria targets 4,585 to 5,083. Joe, you bought some QQQ calls. That was, I mean, that was a great play. I would definitely take some up there. If you look at the market internals, you know, yeah, I mean, and if you look at the market internals too, not that this is going to matter a whole lot, but you can see the market internals have just rallied off this dip back to the highs. So for like an intra trade, that was good because you got these coming back to the highs. That could create a little resistance, and then you can see what's happening right now on your QQQ. You're getting that red candle down, blah, blah, blah. But yeah, that's pretty solid. But yeah, as far as Ethereum goes, let me bring this up for you. All right, hold on. All right, so Ethereum has, I mean, a euphoria target again of basically 4,600 to, we'll just call it 5,000, or in some change. Okay. We are kind of in that alt season area. Again, I still got targets on Bitcoin to 100 and, like I said, 120,000, 130,000. So again, we'll see. But right now, Ethereum, yeah, we got up to here. Yeah. I was going to bring up an email that I sent to my golf league a while back about Ethereum, but there's no point. But all it really said was basically, hey, buy Ethereum. Hey, Ethereum's going to go to basically where we're at right now. So that was it. So we are coming into basically one of the first targets I would imagine, what I kind of picked for Ethereum in my mind. Once we break out this top and whatever, yeah, we're just going to expect it goes up to about 5,000, 4,600, and so on and so forth. Big pump there on the old SPY. Well, I don't want to call it a big pump, but you guys know. That was kind of what I was like talking about. I'm like, you got to watch out. Like, this could press along. I didn't think it would like be like exactly like that, but again, it's just sketchy. It's just sketchy down there. There's just way too many opposing arguments right now on where did it go? What the heck? Oh, there it is. I see. Yeah, like I was saying, again, there's just too many opposing arguments on these market internals, right? If you look at the internals of the market, it does not say that the SPY is breaking down right there. It says the opposite, and that's what I was saying. Like, you kind of have to watch this like more of like the long here, and it's only because when you look at the market internals, nothing looks weak enough that we should be breaking the market down right now. It doesn't make sense. So unless the market's just going to randomly do it on its own, which how is the market just going to randomly do that if the S&P 500 or the Nasdaq is a reflection of all of the equities performances in the market on any given moment? Again, we always kind of have this, well, markets can kind of do what they want, or like, the markets could just randomly do this. It's like true, but not in the sense that what makes the markets do that are market internals, right? Or for that matter, it's the equities in the market performing poorly, going down, that creates the reflection of the SPY going down. So we need enough of that to be on that playing field. Side note, the market is not extremely bullish by any means either. So just because we're saying, hey, it's not time for this to go down like that, and we're still seeing this kind of pop to roll scenario. It's just you really need more cooperation on the FANG, and then maybe the Nasdaq 100 and the Nasdaq. There's a roll back down. Ooh. Oh gosh, I'm trying to bring it back over. So we're still sitting right at the over/under support. And again, you can see a little bit here. You have the roll on the NYSE. You kind of have the roll on the SPY. You have the volume of the markets decreasing. The Nasdaq 100 is doing basically nothing. It's flat. So where I would say the market, could arguably give up the support is if we can get the Nasdaq to roll along with those FANGs. If those two give up, then you'll see this probably come down another leg or something. All right, so you just got a new roll there on the NYSE. A little bit of a roll. You can see with that little fresh roll, the SPY is sort of breaching that support just barely. Let's just pop into Bitcoin real quick. See what let's see. Not really doing much. I mean, that's kind of irrelevant. I mean, I guess it's done quite a lot from the buy point yesterday. But as far as today, Ethereum USD. Well, let's see these. Yeah, Ethereum USD. Week. And we're through that. Whoa. Again, so you're getting a little more rolling action on the Nasdaq, NYSE, and the SPY, and the volume of the market. Arguably, the last thing might be that the FANG names, which we'll see. Those start giving up, you should see a little bit more weakness, I would imagine. Sorry, let me bring this up. Okay, so there's your first support break this morning. See how the market again snapped below that. And meanwhile, you can really just see that the QQQ is just holding up, and a lot of that's due to that FANG name. I keep repeating that, but I mean that's kind of what the market says this morning. All right. So there's the market pulling down. Again, you should be expecting this to go to 605.09 all the way to 604.86 on the SPY. So, yeah. So again, the target of this snap down is 605.90, or 605 and 9 cents. So here to 604.86, about here for the moment. So basically this blue box right here That's about the target for this snap down below support, right? You see that? And again, real quick, remember how we're saying it's not quite ready for the breakdown. You need more things to roll. So now when we go back and think about, hey, we need more things to roll down, let's run through what we just saw, and let me like bring it like this. So this is the NASDAQ. You can see over just the last couple minutes, as the market was just coming into the over-under, you're seeing red candles print on the NASDAQ, okay? You got what here? Look at the market internals on the FANG. The FANG at the same time gave you an abrupt red candle. The SPY was already rolling. But what else did we get? We finally got the rollover on what? The New York Stock Exchange issue. So the NYSE issues, if you wanted to, you could get cute and you could be like, oh, there was this descending whatever pattern. That finally broke down and rolled, right? So you're starting to get what was necessary in that moment for the intraday market internals to take the market down a little bit. Ready? And now the QQQ is getting a little weak. So what you're starting to see is that weakness, not that it's going to persist for forever, but enough so that we were able to roll that market and break that support. And that support was identified, since, I don't know, 7 in the morning, 6 in the morning, whatever, right? So it's not like this support was made because that's where we bounced going into the open. This support was made from all the way the beginning of today's pre-market session. When the market opened this morning, that's what helped create that support today. So this support that we just snapped a little bit, take us down to basically the next support area, bounce, scalp area. That was... this support was created not from the bouncing that happened during the live trading hours. It actually is because of the market open pre-market. So going all the way back to pre-market, that helped create the level into today's live session. And then ultimately today's breakdown here that we just got was built off the back of the New York Stock Exchange issues, the New York Stock Exchange issues, the NASDAQ 100, the S&P issues, and a little bit of the FANG names just kind of getting sold there a little bit. And then also we got a nice rollover on the market volume, but that's, I would say that's less of a leading thing, because like obviously if the market's selling down, then you'd expect there to be kind of selling volume, you know what I mean? So that to me is kind of like whatever. Whoa, not so fast there, Mr. Bautista. Way down we go. Not so quick. Look at that bounce. Again, the other thing too being is like, if you think about the way that most would view a market, right? They would go, oh, support broke and now the market's bearish. But the reality is this level was always one of the short targets today. So as the market finally goes into the short target, shorts cover and then squeeze pop. So as the market breaks down into the desired sell target zone, which some of you guys that are on the stream that are, just came in. Again, I know we talk a lot, but if you go back to the beginning of today's stream session, we talked about the potential targets on the upside today and then the targets on the downside. And then as the market opens, we will use the market internals to navigate the intraday, to understand how the markets are moving in real time. That is going to kind of dictate the bias on the day. And then as the markets move, they can go to and from these levels, right? So that being said, this blue box was our desired target on the downside for the breakdown of support, which was here. I know that's a lot to take in, but yes, that's the truth. So again, this blue box, that is where the short target. And when I say the short target, there could be Somebody else could have a different short target, right? Somebody else, the market again can always do whatever it wants, right? The market could have gone below that short target. The concept being is, again, if a level has reached on the sell side short targets end up being buy points because shorts cover, which means they start squeezing the price back up. And then also the longs that know that that's a short cover buy into the short cover to basically self-fulfill the prophecy, right? Which is that sell targets are long entries and long targets are short entries. Again, long target being if the market is going to go up $5 a share and the longs meet their target, then they sell. If they sell, price goes down. So then that would be a good spot to short, right? So do remember that a lot of times long targets are short entries, short targets are long entries as well, and can be used interchangeably that way. If you're, that being said, if your short target was bad, then, arguably the market would maybe go past that and it wouldn't be a good buy point, but that's neither here nor there for the moment. So is that all making sense? Can I get a little thumbs up? Is this all clear? Is this stream helping you guys? Are you enjoying? Side note, again, if you guys think about the Fibonacci that we are running from today. So this is today's Fibonacci for today's gap, right? So we know that obviously if the markets don't run out to 161 and they fail, a lot of times they're going to go to golden pocket, right? So that's one tactic, If we brought up the SPY, it would be, 1 second, SPY, and we'll do it like this, regular trading. Right, so if you look at Schneikes like this, right, so, and I could actually pull this over a little bit, 60563, that's good enough, 52, whatever, yeah, that's good. All right, so if we pull that out, right, so again, market failed to go 161 down to golden pocket areas. And if you look at, if you look at the chart on the regular trading hours, so if you just look at the regular trading hours chart today, right, you will also see a head and shoulders formation right at our support level, okay? And then, as the market breaks down that head and shoulders pattern, it goes below the 1 minute 50 SMA. So this here, 1 minute 50 SMA. So you take out the 1 minute trend goes negative right into the over under support, So again, usually the market should, like all said and done, hindsight 2020, the market should always be clear, right? Should always, because again, that's how the market works. But, when you look back, you're like, oh yeah, there's a head and shoulders, breaks the support. 1 minute SMA goes negative, so the 1 minute trend is finally negative on the day. That's the other thing too, is that's where the trend for the 1 minute, at least for the first time, went negative. Literally, since the open, the market is over the 50 SMA until it head and shoulders sideways and then goes below the 1 minute. Now the 1 minute is downtrending, and then you break support, right? And then of course you had the market internals all kind of flipped a little bearish there to help that move happen, and so on and so forth. You get the point. Let's go, team. Let's go. What's the VIX doing? Really nothing. Oh, this is actually a perfect time to talk about the VIX, right? So take this morning, take that rollover. So we had the ISM, we had the data come out, and everyone's like, oh my gosh, the data. Remember, the data is simply used as a catalyst to move the price of the market to and from where we want it to go to. Okay, so remember about market open. If you go back in the stream, I would have mentioned, hey guys, we have a gap up. We're either going to go gap and go long to targets, or we're going to pull back golden pockets, right? We'll look at the market internals to get a bias, and then again we have data, and data is really just a catalyst for the market to move markets to and from the key levels, right? In this case, we'll call the blue box the key level, one of the key levels. The other key level was up here in the high, so I can't just like be like, oh, it was the blue box. Oh, yeah. No, one of the blue boxes, right? So market opens, how are the market internals, and then the catalyst being data will most likely be used to move the markets to and from the key levels, right? Or to the key levels, all right? So when you think of the data, right, and you think about the levels that we already had on the chart, and talked about before the market opens, and then you see how data comes out, runs the market down to that level and then bounce, right? So do remember that data, in a sense, is random and not random, and then it is also used as, again, simply a catalyst to move the market to and from price points that are already being watched and are known about well ahead of time, one way or the other. Okay? Now, you may not always have the levels perfect, right? And they may surpass them or go past them and go to different levels, but whether it be an SMA, a Fibonacci, a volume weighted average price, something, right? The market is always attracted to basically how do we screw people over, right? Liquidity, buy side liquidity, sell side liquidity, right? Volume weighted average prices are a great way to know where people's liquidity is at, right? Fibonacci's are a great way to know where sequencing of events are at. So on and so forth. So the market likes to move to and from these things, whether it be, so again, that's basically the way that me and Brandon will visualize or think of data. We think of data these days as simply a catalyst for the market to move the market to a place it already wants to go to, but it just needs a reason for everybody else to believe it. Ready? So you guys see data come out, data rolls the market down, snaps it down directly to the price target. You go, the data was bad. That's why the market went. No, we already were trying to do that. We just needed to give the market something to sell to people to make it happen. That was what happened. Okay? Also, that whole time that we needed that catalyst to move the market down, the market created like a head and shoulders pattern. So somebody's going to go and look at the chart and be like, oh, it went down and maybe the data came out and went, but there was a head and shoulders pattern there. So the pattern was bearish. So that's why it went down. The market was always moving that way. Hindsight 2020 is always clear, but bottom line, since the market opened, the market wasn't extremely bullish, blah, 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 blah. It created a head and shoulders pattern. Data came out, catalyst moved it to target, snap it down, right? So now someone's going to see a head and shoulders pattern, and if they don't look elsewhere than that, then they may simply believe that it's simply because of the head and shoulders pattern. And I would say that it's true, but not the full story. Steve, I know, brother. I know, it is. And that's okay, or maybe it's not. But I mean, it's a very intricate game. Yeah. Yeah, so you have to, and just like Crypto P said, algos pre-programmed, and there's so much, and when we say pre-programmed, I mean, the reality is not, it's not like someone's just sitting there with a button that's like, yeah, we're going to upload the dinosaur pattern today. Click, upload, uploads literally a little file of a dinosaur, and then the market trades in a dinosaur pattern for the day. That's not quite it, but you do have, big firms that put a lot of money behind algorithms, and they could be running all sorts of them. There's mean reversion strategies, mean variance optimization strategies. Those are pretty common against robo-advising companies. Very common, actually. But again, there's programs, and they're all battling against each other. But again, and I'm not going to sit here and act like I'm some mathematician that knows a bunch, but through my, decent amount of studies, the reality is, I mean, there's only, I don't want to say that's not entirely true, but like we'll just take SMAs. SMAs are very, very commonly used metric for algorithms and back testing and models. And one of the main reasons why is it is one of the most consistent and constant forms of data that can be pulled from, because the simple moving average calculation of a 10-day or a 10-day moving average, it's simply just that. It's simply the 10-day simple moving average, right? Same with the 50, same with the 100, same with the 200. That's all the same. But for an algorithm to try to program a pattern, a head and shoulders pattern, I mean, bro, it's impossible, because there's so many different variations. It does the left shoulder stop here, and those are unknowable variations that you can't really account for. But something you can account for is a constant, simple moving average calculation that doesn't change. It's always whatever the price is, it is, right? That's what it is. So a lot of times you're going to see things like those put into different algorithms and programs and things like that. Hence why right here would be a little bit of a piece of the puzzle. So like think about all the algorithms, high frequency trading companies, high frequency trades that were like, oh, hey guys, the 1 minute trend, the 1 minute SMA today flipped bearish. So in that moment, there could be someone who has an algorithm that's programmed that basically says, for whenever, whatever, if we break below the 1 minute, then instantly flash order something on the ask. If you get filled, flash order the bid, and you make money on the micro 1 minute downtrend. Now, me and you, we can't perform like that, because you're going to run into a situation like this where, breaking the 1 minute accounts to one candle down and then done. But a high frequency trade that can do that, right? So, that could be something, and I'm not saying it is, but they can move so much faster than you and I. But bottom line, whether or not they're moving and performing like that, one thing that's for certain is that the 1 minute SMA did in fact break down there. That could very easily be programmed as a constant, right? The algorithm goes, well, if I'm going to get bearish, is the 1 minute even bearish? No? Oh, it is? Okay, maybe I can. So it can be a if-then statement that's programmed, which would be, if I'm going to be bearish, at least see that the 1 minute is bearish on the day. If the 1 minute's not even bearish on the day, then why am I even trying to go bearish, right? Something like that. So how we really, that was all algorithms and things like that, and so on and so forth. Dude, know what would be well, I wonder if the Qs is going to do. See, I did see this before. I said I gave the price target for the SPY, and they ran it on the Qs and did some scumminess, and basically they're like, no, Connor, we're not going to give you the SPY target today, but we will do the Qs. So if we get the Qs target today on the long side, we should expect the Qs even runs up into about $522.43. But they did do this to me the last time I was streaming. When I say they, it's just, it's my interpretation of, the universe. But yeah, the last time we talked about gap targets, they shied the SPX, shied the SPY, and then ran the Qs. And I'm like, you dirty dogs, you would do that. Move with where you ain't looking. But then again, I usually don't look for targets on the Qs. Usually I look for it on the SPX. It's more of a thing there. But, so take what I just said with an extreme grain of salt. Let's say, yeah. Anyways, I'm gonna go get a refill on coffee, and I will be back. Happy 4th of July to everyone. Happy 4th of July. How's everyone doing? Hopefully you got some burgers ready to cook on the grill this weekend. Oh boy. Oh. Okay. It's kind of late to that little 1 minute micro guy, but it's basically tracking this last little breakout. You can kind of see here. So there's kind of a little up, little mini flag, whatever you want to call that. And then it breaks up, and then we pull the market back to the volume weighted average price of such break. So basically, everyone who chases up this move, whether you're late or not, our objective is to pull the price back and screw you over on the micro scale, and that's what we just did. You see that? You can see that right there. Again, you can see flag pattern, break up, pull back to volume weighted average price of breakout. And that's one way that I use to predict where we're going to pull markets back to in a micro scale and in longer term scales too, but what we're seeing right here is more of a micro scale. And that's very, I mean, that's, it's like, that's just one simple pullback, right? It's 2 red candles down and a little pop, whatever. This isn't to say like, oh, like this is going to make the market go like that, or, it couldn't, it can always do, like what it pleases, but there's common things that we expect to see, kind of repeat, time and time again, and that's one of them. So, granted, I wish I would have had it on the chart prior to it happening, because, that would be cooler, but, All right, so let's take a peek at the market internals and just make sure what we're seeing. Yeah, so, when we look at the market internals here, so, like, where is the market right now? The market is mainly coming off of, it's a little bit of everything, because we kind of bounced the SPY a little bit. We bounced the NASDAQ 100 just ever so slightly. We bounced the NASDAQ, and we're bouncing the NYSE. So everything in the moment is kind of like a little bit of a long push. Nothing that's super aggressive. You don't even have the FANG names really working for us at this point. They're kind of just hanging out, going sideways. So those are kind of slowing in momentum. Not to mention, I kind of forgot, too. We did just come up and we got very close, but the long target, and there's a couple different ones, but long target on the QQQ is also 522.21. We hit 522.10. So that's another thing. I know I didn't really mention that earlier. I might have. I don't think I did, though. But yeah, we have long targets on the Qs, 522.21. That comes before the gap target. And now you can kind of see how we just rolled over the the FANG here. I know I say a lot of FANG, QQQ, NASDAQ 100, all these things, but right here we just rolled the FANG a little bit, and that kind of contributed to a little bit of a red candle down on the Qs. But anyways, we are coming into, or did basically come into, a long target there on the Qs at 522.21. Kind of forgot to mention that it was also away getting coffee, but what are you gonna do? That's a little bit. It's a little bit different than the 522.40. So basically, right now the long target zone for Qs was 522.21 or 22 to here. Now I know that we didn't specifically talk on the Qs today. We did more of our talk on the SPY. There's only so much. I mean, if I literally said every single thing to you guys every single day, then it would be like 16 different thousand, it would be really hard to follow. But yeah, this is pretty much the long target on the QQQ right now. See, and you can even see like what's not helping right now is it's the FANG name. So you see how the FANG are kind of slowing down. So arguably the FANG is what helped the QQQ stay up today and kind of run a bit. Now the long that we're seeing on the QQQ and the SPY is being built off some of the performance across the NYSE here in that dip. Some of the SPY, and again, pretty much everything else, everything but the FANG. Let's see, what am I doing? I don't know what I'm doing. Sorry, I'm just reading a couple messages and things like that, guys. Sorry. Okay. Yeah. Whew. Look at that. Look at that Qs get rocked. Well, you guys can see it, but I'll bring it up. Not like I need a race to do it. Wait. Oh, over here. I mean, it didn't get totally rocked, but look at that nice. I mean, again, it shied the long target by a little bit. And it's not like, so like take this for example. Even though that target would be the long target, it doesn't even mean that it couldn't go get it later. Yes, it shied right now. But, don't get so caught up on, where target's at and all these things, And if we look at the market in terms, remember, look at the FANG. Is the FANG performing right now? The FANG is not performing. And a FANG is a huge contributor to the price action of the NASDAQ. So right now, we don't have the FANG really contributing. The NASDAQ 100 has kind of stalled a bit. The NASDAQ has got a little pullback to it. And then even the NYSE kind of slowed down there. So like everything right in that moment was kind of just like slowing a bit. So it's not even really a surprise you had that pullback there. But anyways, you guys get the point. I don't want to sit here and just bore you to death with the same thing over and over and over. But Yeah. How's our friend Ethereum? Oh yeah, sorry, BTC.D. I want to talk about this real quick. So again, you guys can see here with the Bitcoin dominance chart, the Bitcoin dominance is continuing to go down. So therefore, you're going to see your altcoins performing well. That's why Ethereum is staying up. That's why XRP went through its run, along with whatever news and this and that and Doge. And again, you know, that's pretty much just it. Your bit. I don't want to say that's it, right? But your Bitcoin dominance is losing dominance. So as Bitcoin loses dominance, money flows from either Bitcoin to altcoins or just people who are on the sidelines waiting for the alt season or whatnot, you know, the pump. Now you're having money kind of flood into those alternative cryptocurrencies as the dominance for Bitcoin starts to fall a little bit. So that's a totally normal thing to see. That was again another big contributor to why we are seeing the price action we're seeing across some of the alternative cryptocurrencies aside from just Bitcoin. The Bitcoin dominance is falling, which is naturally what happens later on with the cycle of Bitcoin, you know. Good stuff. That is pretty good. Yeah, I mean, I guess there's really not a whole lot more to say here about 10:52. Early morning fun stuff is pretty much done. So, yep. Oh yeah, we're coming into yeah, interesting. Was that right? Again, the market internals for the time being are kind of rolling bearish on the QQQ, or sorry, on the FANG, so that's obviously not helping QQQ right now. Again, they're all just kind of meh, just real awkward today. And it's not even that they're real awkward today, it's just, I mean, there's been just none of them have had kind of a full trend move. It's just kind of a little bit here, a little bit there, which is creating that environment on the chart that's not, it's called amazing, if you will. It's just kind of, like if you look at the chart of the SPY, that's what I mean. It's like I keep looking at the SPY, right? If you look at the SPY right now, again, you can clearly see head and shoulders, breakdown, huge reversal long with an inverse head and shoulders pattern back to a top down. So as a whole, you're just getting up, down, up, down, up, down, up, down, nearly flat sideways on the day so far, right? And again, as you look at the internals of the SPY, the market internals on the SPY are just pretty much flat, right? Now, if you look at the NASDAQ, across the board, they're all gapped up and kind of held, hence why that performance on the NASDAQ and the QQQ market's a little better today, or looks a little better for that matter. So yeah, again, like I said, most of the fun stuff probably done. I don't want to say it's probably done for the day, but you know, again, this is where a lot of times the market can get a little slower, things like that. Sometimes it doesn't have to get slower, but you know. Oh boy. And then, you know, like right here, this isn't a perfect tag. There's another way I would look at this, but this would be like arguably the zone I would have watched, that last dip. So again, this last dip you're seeing through the SPY, right? So that zone would be like here, and I'll take off. No, I keep that on. I don't really, it doesn't really matter. Okay. But again, like you can see clearly, push up, come down, hold support, bounce. And it's not that it'll always work that way perfectly, but again, we're taking the last low of this really big rally up and then mapping off the low of that. See, again, the first thing that we look for, first thing you'll probably see, again, you can see this little breakout in here. So if we take the breakout volume, everyone who chases this long up, boom, stop them out, run it down to next big kind of demand start, volume weighted average price, and then be a way up. Y'all get the point. You know the deal. Nope, we still use them. Nope, still use deviation lines. You just may not see them on the chart. Again, I have 6 screens that you don't see. So, and we'll bring them up every once in a while when I, feel it's kind of necessary or valid or what have you. Speaking of, one of the most recent ones was MSTR. Yeah, I mean, the TA on Bitcoin is we have price targets on Bitcoin to about, 120, 130,000 right now. The long-term sell target for Bitcoin right now is around 43 to 44,000. There's various different supports that I could talk about below us, but it's kind of irrelevant because, yeah, I mean, maybe it's not irrelevant, but again, really the main scope, Bitcoin, 120,000, 130,000 target, 43 to 44,000 is a long-term selling destination target. We have anywhere, in my opinion, from maybe 100, and I said this about a week ago, but it's anywhere from about 100 to 300 days left in the current bull market cycle run before we may expect to see a bear market top. So yeah, you have 100 to 300 days left in the bull run. Price targets in the meantime, 120 to 130. Long-term selling destination target right now, 43,000. If the price of Bitcoin skyrockets more throughout the next 100 to 300 day cycle, then the long-term sell target is going to go from 43,000 to much higher. Well, maybe not much higher, but it will definitely go higher. But currently with Bitcoin price at just below 100,000, the sell target retracement is 43,000. If in the future Bitcoin goes to say 180,000 before the next bear market, let's say, then that $43,000 target may be 50. 60 or 70, just kind of depends on where it's at when it happens. And that's and the reason, and I so yeah, that's the Bitcoin analysis. I know Bitcoin like the back of my hand. That's why I could say that to you. Like, I don't even need to go into the chart. And then again, like, yeah, I mean, that's right now is the most key thing that I see on and so yeah, 100 to 300 days. Yeah, it's more of like the protection, because in 2020, and the reason I say that is if we want to be simple, we would just say it has 300 more days left, right? The past cycle we topped at like 800 days in on the cycle, and then it went through a big pullback, then got bought back up again just to top out, do a double top at like some 1,000 some days in. So it's like realistically the bull run is, we have 300 days left on it. If there's some early shenanigans, then that would be like 2020, where we had a temporary top about 800 days in that recovered, then top 200 days. So it's like, it's just basically using what we have information on the past to use for the future. And again, it's not about the odds, right? It's just having a generalization so that, yes, if you're 100 days in and all of a sudden there's a mega top that gets put in for Bitcoin, it's like, guess we're kind of getting in that area. And if you think about the 100 to 300 days in from the start, then that means the market has pretty much been on a bull market pretty consistently for, if you hit the 100 for 80% of the time. So it was, essentially we started over some 1,000 days ago, 800 days ago, has been pretty much straight up all the way to. So you're already in the 80th percentile, 75th percentile of, I guess you could say the entirety of how long it may exist for this current cycle. So it's already done a great job. We've already been pretty much straight up for, I would say 70% or 70, maybe 73% of that kind of time cycle. So yeah, I'm using the 100 to 300 days out, just to kind of prep people that as you start to get towards the end of that cycle, you don't want to be like, oh, it's perfectly 300 days, right? And then you wait, and then, no longer being on the top, you're down here. So it's like, give yourself a little bit of a buffer, anywhere from 100 to 300 days, I think is good there. out. Oh, by the way, QQQ, you can see we just hit target. Remember, the blue box. This is the beginning side, and then like obviously the secondary side of it would be this. Would you short Bitcoin? Right now, I would not short Bitcoin. Nope. In partly because, based off of my research alone, we could have another 100 to 300 days of the bull market before seeing a significant top. So, it would be a scenario where, it's like, in my view, it's like, why would I even try? There's no point. You'd be better off just, it's like you're probably better off just, well, it's not entirely true, but yeah. So knowing that we have anywhere from 100 to 300 days to go, I just wouldn't do it. And then not to mention, it's like Bitcoin hasn't even reached prices. I mean, it's definitely a really strong run, and we've had an explosive breakout, like a month back or whatever. But it's not even in euphoric levels, so I just don't see it as like a really great short right now. My analysis does not lead me to believe it's a great short, and if it ends up being a great short, then that's fine too. Rather, rather miss it than risk it, as Brandon would say. But yeah, bottom line, I don't really see a reason for. Now, if you're talking about like micro stuff, then yeah, I mean there could be a short all day long, every day. I'm already looking. I'm basically considering the Bitcoin price to go down right now a little bit to our 4-hour target. So yeah, there's reason for maybe Bitcoin to go down to a 4-hour target I have right now, but is it going to top the market and just be a cool bear market? I don't necessarily think so. So there's always some short-term stuff, obviously, you could do if you want. But in terms of big market cycle stuff, I think it's not the time. Yeah, looking at Bitcoin here, I mean, I put it on the chart a little bit ago. And is it going to work perfect? We'll see. But I was even thinking we're going to see Bitcoin roll down here to about 94,920 next. So I was kind of thinking we see this kind of up move fail, then it rolls over down to about there. I mean, I could totally be wrong. You know what I'm saying? But I just think it's at the point where, again, if this selling move is going to continue, the next breakdown should be about into 94,000 or so. Because the way I see it is, we pretty much did we did the long here off the daily chart, up, then talked about the short-term pullback to here, then the support you'd first watch here, which lasted longer than I thought. And now we've kind of done like a 3 up move there. So we've been long 1, pullback 2, pullback 3. So that is 3 charges up, top, bounce, roll. So I'm assuming if this roll is successful and breaks down, we're going to go to about there. We'll see. And again, this is all shorter term analysis, which can work. It's just not as strong as some of my longer term level stuff. Like the other day, which was just yesterday, when I said, hey guys, you should be looking long Bitcoin right here. That's because we were on a there was two levels, so it was more like a zone like this. But when I'm saying you should be long bias here, that's because we're coming into longer term levels that I have far more conviction in, and that I'm a little bit more certain about, if you may. But this is some of my shorter term stuff, which is always a little here or there. It may not be as perfect or as clean, but anyways. So that's currently my short term Bitcoin target. I'm assuming we'll see. Oh, there was someone was asking about standard deviation. I do use Thinkorswim. We've been using Thinkorswim this whole stream. Yeah, so like I got stuff on Thinkorswim here, standard deviation. I have, Thinkorswim here with MSTR. This is how I basically, we'll just say this is how I informed the public that MSTR was probably going to top. That being said, I was still kind of on the fence, and I still am, but whether or not that top is going to last or not, we'll see. So far, the shorts have won the top. Now, yes, the stock is up a bajillion% over the year. That's irrelevant, because the stock just hit euphoric levels that kind of made sense to try and pick a top on. All of this stuff back here, like none of this stuff made sense to pick a top on. That arguably did. But that was another thing too, as far as standard deviation, is that, we used MSTR to basically run analysis and said, hey guys, this is normally where you're going to find resistance. And then the next day it dropped 30%. So again, this is a common tactic, looking for +4, +3 euphoric markets, pull them down. Doesn't always work, but decent spot to look for that. So we just used the standard deviation on MSTR the other day, or other couple days, for basically suggesting you have resistance on MSTR. Yeah, Germ, I'm more than... I don't know if you have me on Discord, but if you do, shoot me a message there. The standard deviation I use on TradingView, you guys can search it up. If you search in JMF, you should see it's under JMF Tattoo, standard deviation, channel V1. It's not as good as Thinkorswim, but it works okay. The only thing you should use it on is like the daily or the weekly. That's it. Otherwise, the calculations aren't going to work. And that's because of the way PineScript is and how you have to use PineScript to write it. You have to go with the look back period. You can't go based on years. Anyways, so yeah. Anyways, you can use the PineScript one. It just is not as good as TOS, unfortunately. But, So again, guys, going over to the QQQ, you guys obviously know that we have hit the long target on QQQ. Now, obviously, it doesn't have to stop here. It can keep going. It can do whatever it wants to do, blah, 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 blah. But again, that first kind of desired long target destination for the day has been hit on the Qs. SPX still hasn't gotten its long target, so I wonder if today's going to be the day where they don't get it, and then we get it tomorrow. That's another common thing we'll see, is that if we have a gap and we don't get the long target for the day, throughout the overnight session, if the long just doesn't fall apart, we'll normally go up and get that. So I know that's kind of sounds dumb. It's like, yeah, if the market keeps going up, then obviously we're going to hit a target that's on the upside. Like, duh, right? But a lot of times it can be used as like a secondary measure for the next day. So it's like, if we don't run up and get it today, then a lot of times you'll see it by tomorrow, as long as like nothing crazy happens and the long doesn't fall apart. And that's because you can see that the Fibonacci sequence is still intact, right? If you take today's gap and think about the Fibonacci sequence as something that is intact until it falls apart, then you would say, oh, so really all we did was open up, test the golden pocket, and now we're rallying. Though we're not here at the 161, and though it usually gets it on the same day, who's to say that it can't just kind of rally up overnight and go get it? And then what would you have? You'd have a golden pocket 161, right? So 161 still intact, fib still intact, yada, yada, yada. Oh, by the way, so there's another thing too. Now that we've kind of bounced this out on the SPY, you'd be running it up like this. So you'd stake one here, and then we would take one and go like right about there. All right. So that's arguably the pullback destination for the failure of this kind of area. Sometimes they'll keep grinding it up, but again, it basically means if, you know, for whatever reason the market, and like right now I can already see like this little dip's coming off the last dip. So if I go and anchor this and even move this to split, I mean, that's pretty much what it's doing. It's trying to hold this little dip in here off this last little bottom, blah, blah, blah. So it's doing it like that. So if at any point we kind of fail the current structure, market would be, you know, highly magnetized to down to there. So right now the SPY is basically doing this little stair step on the 1 minute micro scale. What's going on with the market internals real quick? So let's take a peek here. Market internals. Again, the NASDAQ, or sorry, the FANG are just not really doing much. The S&P issues, though, are grinding up, so that's helping that SPY stay up and progress. We are getting advancing issues on the NASDAQ. We're getting advancing issues across the NASDAQ 100. We're getting advancing issues on the New York Stock Exchange. We're getting increasing volume on the New York Stock Exchange. The only thing that's currently lagging us right now is the overalls on the FANG, right? So if you look, again, you have the FANG. So basically the market, right? The FANG, the major market cap stocks are currently going down. It's very hard to see the SPY continue to press when those are going down, or it's hard to see the S&P 500 continue to increase at a fast pace when the major market cap stocks are not performing right now. So again, we can look at this and just go, okay, we don't know which ones for sure, but Apple, Microsoft, Amazon, Meta, Google, Nvidia, some of those are lacking right now. So if we go look, what's Apple doing? Look at Apple's topped and just trading sideways. Nvidia down, back to up, and then recently pull back up, slight pullback. So it's bounced, but it's not necessarily running through highs. It's not mega trend. Microsoft, top, pullback, grind, sideways, right? Google, top, pullback, grind, sideways. Amazon, top, rolling down. Meta, down. So Meta is the major contributor to the lackluster movement of the FANG names right now. So yeah. And then next would probably be Amazon, followed by maybe Google, Apple. You get the point. So that being said, when we look at the SPY, it's like, yeah, clearly it's not just running like crazy. I mean, some of the biggest market cap stocks are getting spanked right now, along with just like hesitate small sideways up. So the smaller, the kind of shorter, the slower kind of press for the moment makes a lot of sense. Bitcoin's going down. I don't know why. Not quite sure. Who knows why? Nobody knows. It's unknowable. Again, that little micro dip there on the SPY totally picked up. Which, pretty common, not like it's like a huge secret or anything. But it's more or less like, you know, when I look at this last dip down here, right? That's a pretty aggressive 1 minute chart, micro long to the upside, right? Like that's pretty aggressive. So I'll like to track that low spot and then obviously like you're normally kind of looking for a retrace into there. But there's times where maybe it won't, and if it doesn't, it's because there's been some chart structure developed, you know, prior to, say, going there that looks like this, where it's like, okay, so it kind of held a dip here and a dip here. So like clearly it's kind of holding in that spot. So this could be that situation where they use that micro dip scenario, which looks like this, where we kind of track in the middle and, you know, anyways. So like right here where this would instantly be moving this to there. And then this would be like this. At least. A 48 people watching, 50 people. That was the most we've hit all week, so that's pretty cool. Or 49. 49 was the max. That was pretty, that's pretty. Oh, 50. Nice. Thumbs up. Let's go check on our friend Ethereum. Is that doing anything cool right now? I really hope so. I hope it breaks out. That'd be nice. Or just not work. That's so weird. I don't know why I was doing that. Nah, Ethereum. Good old Topper Magoo. Good old Top Daddy. Actually, now that I think about it, I think Ethereum's gonna pull back. It might be a little soon. I was kind of thinking of it earlier, but it might be pulling down to here to about 3,000. I'll have to double check that price real quick. I could be totally wrong. Oh yeah, it's wrong. Well, not necessarily. Because that would be the target. Whoa. Yeah, I mean, realistically, the target pullback there would have been to here. If it gets extended to the downside, then maybe we see this here. But I'm kind of late to that. It's for when it was rallying out and started doing this. I should have let everyone know it was gonna go to about there. We might get that, but it's not. I don't really trust that for the moment. We really already hit target. I don't want to say we hit target because obviously you can kind of keep good. But as far as a target, I would have picked on that. It would have been there, which we're kind of below it. But anyway, so that's kind of already done. Lacey, hope you're having a great week as well. Good to see you. Connor, so you know when you look at the standard deviation chart, past prices usually land on deadlines. Yeah, so the standard deviation is obviously, you know, it's an ongoing calculation of the current price to give you a probability of a volatility, right? So I guess I wouldn't, the way you're saying it, it doesn't really resonate with me in a way that makes a light bulb click, but ultimately price of the standard deviation channel is going to consistently repaint and change as needed to, you know, try its best to give you representation of current volatility for the market. Yes, and then as it settles down, what you're saying, a lot of times it can line up very clean on, it'll look very clean afterwards, right? And that's because after the volatility subsides and all the numbers are in, then it can kind of be set in stone, right? To a degree, not really set in stone, but yeah. Once the volatility kind of subsides and relaxes and you can say it shrinks a little bit, a lot of times it's going to shrink and it's going to look perfect. Like it's perfectly aligned at every little top and every little bottom. And that's because that is the all said and done, that's the standard deviation away from the mean, right? And so it's not like it's a perfect system, but it's a really good gauge. Yeah. So it may not really answer your question or help all that much, but it's probably about the best I got there. Alrighty, so you can kind of see in the very micro scale, where that was. So we really had like a little 1 minute micro there, right? So pretty much everyone who bought this dip and these few candles up, they just got stopped out on that candle, and then we've taken the market back to the support that kind of more recently worked. So now it'd be like this. So again, this is all micro stuff, but you get the point. Yeah, we've been getting a really nice rally across the board on SPY issues, NASDAQ 100 issues, even the NASDAQ and the NYSE. But you can clearly see, like, look at it. Even with the rally on pretty much everything back up, you can see the FANG are just rolling over. And as a result, look at QQQ, just doing nothing. So even with NASDAQ 100, NASDAQ, SPY, well, not SPY, well, S&P issues, right? Which some of those are going to be, involved in. But anyways, so you got a lot of the markets running right now, but the FANG names are going down. And as a result, your Qs are going down. So it gives you a great representation to this, that, also the 1 minute trend finally flipped negative. So you can see here, QQQ, 1 minute chart since open. First time the market actually got below its 1 minute 50 SMA. So it's a 1 minute bearish downtrend start there that could last decent amount, not long, whatever. But again, you can clearly see with just the negative performance on the FANG names, you're getting the QQQ to basically chill out and not do much. Not to mention, we did hit the QQQ long target area right here. So for one, you have QQQ all the way up into long target destination, then top and down, right? And kind of just chilling. So it's like, alone, the QQQ has met one of its desirable long target destinations for the day. And then you kind of couple that with some FANG names not performing very well. It's like, yeah, I guess it kind of makes sense, right? All right, so looks like we just got Bitcoin down to its desirable target. There is your target. So if you do get a little bit of a bounce here, totally normal. Again, it's one of those things where we're coming into a potential support level, so we've used it as a sell target. Now, if we may see a little bit of a bounce and a scalp off of it, totally normal. Not quite ready to change bias for long target bounce, or for this bounce to have targets. Right now, it's just a micro thing. So obviously in the short term, we're going to see this market bounce back, most likely get the 1 minute level. So if we pour this puppy to high, we already got this one. So we already did that. And this is all very short stuff, but probably going to get a little bit of a long press here on Bitcoin after we got that target, just an FYI. And now, you can arguably see like it's equal lows to this and this. So, someone might be looking at this right now and going, oh, it's bouncing because, here. Arguably true. But I would say that, we've just come into a desirable sell target. So there could be some short cover here and just coming into another level that makes sense, right? Again, this is not the be-all, end-all level. This is all some short-term stuff. So if there's a little bit of a bounce, cool. I wouldn't, say bet your account on it or anything like that. This is more of a downtrend counter long, whereas you can see this is more of like uptrend. Now we're bounce rolling down, so we'll see. Yeah, so like even here you can see, like, watch this, we're just gonna flip this bad boy. You can see how it's lower highing and rolling. So if we take this and do the opposite now, kind of throw it off the highs, and that's not the best example, but even this one down, because this is kind of where, this is really where the top and everything kind of breaks down, like right about there. So you kind of have some like rolling resistance right now, anywhere from here to here. It's super sketch. I mean, it's just this very micro stuff. I wouldn't really put too much emphasis on it, but right now this is still kind of the catch-up zone on the bottom. It hasn't quite hit. Again, this is very, very minuscule stuff. I wouldn't put too much emphasis. You know, it's just kind of fun little stuff you can watch in the immediate, but nothing crazy. Again, so if we take a look at this chart here, again, you can clearly see, you know, everything is kind of like rolling down, bounce. Now the 4-hour trend is going to get its opportunity to hold something. Now, do remember, this is a 4-hour trend level that we're watching down here at 94,920. That's why I suggested the market can go down here. It just kind of looked like the market was finally ready to go and test the 4-hour trend. Now, the 4-hour trend is going to bounce a little bit. You can already see the candle is wicking directly at that level. So we're creating a little bit of buying pressure on the bottom of this candle. I don't know when the new 4-hour candle comes. Well, let's see, because this was 7, this was 11. So it's 11:30, and it's a 4-hour, so the next one's going to come in a couple hours, 3 hours and 30 minutes or so. So in 3 hours and 30 minutes, you're going to get your next candle. So even if this were to hold a support, you wouldn't really expect a ton of follow through until maybe 3 hours and 30 minutes from now. So that being said, this probably isn't the strongest support in the moment. And that's mainly because, and I could be wrong, but it's a little soon, right? The 4-hour candle just came down into the 4-hour support, but still has 3 hours and 30 minutes left of trading. So this support would have to be, you know, strong enough that it can reverse a lot of the selling. Or what happens is the market kind of flirts down here, stays low. So let's say the support's going to work, right? Even to the point where it bounces out a bit. You may not expect it for 3 hours and 30 minutes. So it's still a little early there. And that just kind of came to me a second ago when I started looking at the clock and the timeline of everything and so on and so forth. Again, it's not that it's a bad level. It's just a 4-hour short-term level that, again, I expect, again, we will see a little bit of a bounce. But it's just you have a lot of time left on this particular candle where, you know, if for example, we had just sold into this level and the candle was going to close and start a new candle in like 10 minutes, then we would have the opportunity for a new 4-hour candle that only has 10 minutes to go before we might see a transition in price action based off of new candles. But we just don't quite have that, you know. And then arguably, again, it's like if we continue the slide, then we're really just going to keep going down and knocking on the next targets down. So just a real quick, I'm going to flip back here, change some stuff up like this. So that's going to be here. And then flip this guy up. That's going to be there. And we'll flip back here. And then we're going to go to 4. 5 minute. Yeah. So yeah, all I can say is we just hit 4-hour support, little counter trend test, and then later, again, we still got some time to wait. If we see it continue to slide down, then obviously we're just going to be targeting a little lower, and then we would look for something like down here. But right now you gotta let the 4-hour level play. You can't just assume it's going to break down right away. Usually markets don't work like that. Okay, so right now we've hit target, first attempt. You can kind of see it's working itself up a little bit. Totally normal stuff. And then if for whatever reason the 4-hour trend fails, again, this is the 4-hour trend. Ready? So like, you know, might be giving away too much at this point, but It's what I do. I love it. So if it helps you and you can make money and you don't, make my strategies too well known to the point where they don't work anymore, then I would appreciate it. But, so let's go back to here. Ready? Watch this. So we're going to take this guy and we're going to go to the low here. All right. So the other day, just yesterday, right? So you see how we took the market down to this VWAP right here. Let me zoom in and I'll delete this level. I don't need it right now. All right. So see how we had just yesterday said like, hey, buy this bottom, and then basically it goes up and then it pulls back to here and then it dips and then it goes long, right? That's the same thing. And it's in the setup, again, but it's the same concept. That's what we're doing on the 4-hour chart right now. So now let me dial it to a 4-hour. So take this mental picture, long up, first pull back into support, and then back up. Now we'll go to a 4-hour. Okay? Same concept, which is we are doing the first 4-hour pullback trend support test. Granted, if you want to say it's going to be better, or if it's downtrending or this, or, I mean, I get it, that's another story. But in simple terms, it's really just the same thing, okay? And then kind of like yesterday, right? So think about yesterday. Okay, so this is a 30-minute strategy, right? So 30-minute strategy was up, pull back. Look at this candle. You see how it's red, hits support. You see it wick, but it takes the next 30-minute candle and even the next 30-minute candle before it prints green off support. So when you're dealing with, in this instance, yesterday, a 30-minute support, you're thinking in terms of 30-minute candles. Okay, you're not going to use a 30-minute support and be like, oh, it's going to work in 2 minutes. That doesn't even make sense, right? So if you're using a 30-minute strategy, you think in terms of 30-minute candles. So how patient you might need to be with something will be dependent upon what kind of time frame you're using, right? If we're looking at weekly strategies, we're thinking in terms of weeks. So if market comes into a weekly support, I may not see weekly support resolution until the next weekly candle prints. So when we think of 30-minute support like yesterday, up, down, so 30-minute candle down, probably not going to be the candle that you see green follow through on, but it might be the candle you see the bounce, the scalp bounce off the low. So, right, the market is oversold in the 30-minute candle down. It gets a little bit of a 1-minute or 5-minute bounce. But if it's going to have resolution, it takes maybe 30 minutes till we transition the next 30-minute candle. So now, let's look where we're at. Okay, so now we're on a 4-hour chart move, which arguably I don't think is the greatest support setup, but I've been proven wrong. So, again, like I said, I don't think it's the greatest support setup. Just based off the way things are looking, I'm don't have that like extreme confidence. To me, it more or less, I feel like is going to be used as a mini support, and then it's going to break down, and then we're going to go down to our lower targets. We'll see. But again, if you look at the 30-minute from yesterday, you can see how starts up long, pulls back, bounces, starts with a wick. All right? Go to the 4-hour. You can see how the 4-hour goes up long, rolls over, red into, starts with a wick. If we're going to see green candles on the 4-hour chart print, it's most likely not going to be this candle. Why? Because then you would have to reverse this entire selling candle that's extremely bearish all the way to here and then higher before it actually changes colors to green. It would be much easier to print a green candle. Usually, I've seen what I just said happen, but normally it'd be easier to print a green candle if the price stays down here, and then all you have to do is open a new candle down here and start green from here. Okay? So a lot of times like this, if the 4-hour support is going to have follow through, it will have to be over the course of a couple 4-hour candles. 1, 2, 3. And usually along that period, you're going to find out if this thing wants to fail support or if it's going to want to hold support. Because as the market, say like right now, it wicks up. And then as we transition into the next 30-minute candle, or 4-hour candle, say the next 4-hour candle is just kind of a low-hanging candle like this, traps a bunch of volume for 4 hours, and then the next candle breaks that 4-hour candle high, and then you get a green print. So that green print comes off of the initial bounce, the hold, the time weighted, and then boom, like that, right? But if you're not, if you're trading a 4-hour, approach, and you're not patient for 8 hours, then you're not going to see the resolution of your strategy work very often, because your timeline isn't in accord. It just doesn't make sense, right? Cheers. Welcome back. I use every single time frame. I use literally every single time frame. Minutes, 5 minutes, 30 minutes, hourlies, 4 hours, daily, weekly. But it's just as I said there. When whatever time frame I'm using, I'm planning in that time frame. If I was going to use a 1 minute support like I'm showing you here, then yeah, the scalp, you'd be using scalping then, right? If you're going to scalp a 1 minute trend and you buy into the dip on a 1 minute sort of system, then you would expect within the next few minutes, it should start working. Or A, you're probably wrong. Right? If I'm trading a 5 minute strategy, that would be if the candle is red into 5 minute support, then I'm hoping by the next 5 minute or next 2 5-minute candles, it should start curling off the support, because it's a 5 minute strategy. I don't need to wait a day, right? I shouldn't be waiting a day for a 5 minute long to work, right? But if I'm trading a daily support, yeah, it might take a day for it to work. If the market sold off all day into daily support, yeah, at that point, it probably is going to take another day for this to work, because are we really going to reverse all the selling for an entire day as soon as we hit my so-called support, right? So those are some things that I would be thinking about. Again, real quick, you can look at the market internals on the FANG. They're pretty much just going down. So you're seeing that the SPY is not having follow through. Arguably, we retrace that 1 minute level we talked about. Obviously, that's eventually going to happen. We even talked about that little mini kind of reversal top, whatever. But ultimately, you have your sell trend on the market staying down there. What's the VIX doing? VIX isn't doing anything. Again, the VIX, I'll let you know, well, if I'm still streaming, I might start doing some afternoon streams, working in the private group with our members. Well, I'm going to be streaming for the rest of the week as I have been. But then after that, I either might incorporate some sort of early morning stream, or I might just start doing kind of like a free afternoon stream after getting offline with our private group, things like that. But yeah, you can see market internals on the market are pretty much just down. That's why you're not really getting follow through here on the SPY. That's why the NASDAQ's been going down after hitting target. So yeah, good stuff. I still use deviation setups like I used to, but I just have a lot more tools in the bag these days that I use for basically predicting markets. And they all kind of have a certain spot for when I think they make sense to deploy. So, yeah. Again, side note, remember, I don't want to say remember, but again, if for whatever reason we fail this 4-hour trend level, again, we're going to be looking down to about here next. And it may not be perfect. Again, I'm kind of pulling some stuff out of my hat right now. These aren't really like, I want to call it, like, the market's not set up in a way that's like super amazing or anything like that on Bitcoin as far as some of the stuff that we're looking at. It's not like these are just like major buy points or things like that. It's just kind of some random in-between stuff I just assume's probably going to happen just because, but I would be looking at, there's some other stuff I'll pay attention to. I'm looking at stuff down here. I mean, I guess I'll get into it fine. You know, if my strategy stopped working, then whatever, so be it. At least I did something good for the world. But I also think I have so many different variations of ways that we can get into a market that I just don't think, I just kind of, I don't want to say they won't work, but I think they'll all just kind of come and go either way. But like right here, this to me is a huge buy point. When I say huge buy point, I just mean I think it's going to work well. You know, whether it leads to like huge rally or not, there's going to be enough interest down there that I would be willing to, yeah, it's going to work, right? I would come on stream and be like, yeah, you're kind of dumb if you don't buy that right now. So just like the 4-hour trend right there, that little bounce we talked about, even though we're kind of like, it doesn't really feel that great, probably isn't going to work that great, still a lot of time left on it. This would be one where if we came into here, I would, if for whatever reason I was streaming today and we were down here right now, I would say buy that. Whether you want to, and I would just say I think this is a strong enough place, there's enough interest here that you probably, it makes sense to put the risk on, whether that be for a micro Bitcoin future, whether that be, I don't even know, one of the ETFs these days, or GBTC, or whatever, right? I think there's enough value there in the chart that you could use it to make a gain across the Bitcoin network, whether that be MSTR, Grayscale Bitcoin Trust, one of the ETFs, whether it be, I think they just started doing options trading on it, whether it be a micro future, whether you're on Binance and using some sort of leveraged something crypto like I see people doing, I don't know. But that's one that I'm highly focused on. Is that me saying the market's going to go there? No, that's not. Will it at some point? Probably, and I'll be sitting waiting for that day. So that's kind of the thing with a lot of the approaches that I also use these days is it's a matter of like just when they present themselves, when that happens, right? And that, you know, could the market break down and go all the, sure, be my guest, right? But, you know, before it does that, it would have to break through all of the daily targets first, which remember, if you look at just yesterday, I said, hey guys, we have a daily support. Remember yesterday on stream, I'm like, hey, there's daily support down here at whatever price. And what did that do? It instantly boosted the market up for an entire day. So it's like, I just wouldn't expect that yesterday we would break down and then just be selling off, because we still have to fight that daily level, and so on and so forth. So the other thing too is I think we held, was it this guy? One second. Oh, stop it. Settings, inputs, low. No. This guy, that was clean. So this also becomes another area of interest for me. And the reason being is because it basically held the, I would say, the absolute bottom of this last dip. It's kind of don't really take this one too much. This is kind of one of those things that I have to use when something else didn't make sense. But like, that's another area I'm looking at that I think is of interest, right? Another huge area is going to be like this guy, you know, like that guy there. I mean, this is another one here, and then this is another one here. Like these are like really my main areas of focus right now. This guy here, that one there, this zone here, and this zone down there. Now, those are all interesting price points to me on the way down. When I say interesting price points, I mean, when I think of pinpointing price. That's what I think of. I think of what is like the lowest risk possible spot. So I would say like, that's a low risk spot, that's a very low risk spot, that's a very low risk spot, that's a very low risk spot, and then everything in between, I don't even, those are the points of interest, right? So, you know, that I think are developed in this current chart right now. And there's for different reasons why, right? You know, one of them would be the last big dip, right? So the last big dip before the market took this whole rally up would be here. Then if we think about where the market broke out, so when you think about where the market actually broke out chart structure, that would be this candle, right? if you think about the volume weighted average price that gave the exact dip of this last bounce, it would be this candle, right? So things like that. So anyways, there's a couple other things. 30-minute 50 estimated counter. Yes, Todd. Can you do a deviation, setup deviation? I mean, it's out there. You just take the deviation channel on Thinkorswim and just add it 4 times to your chart. That's it. And then you just change the setting of each deviation channel from 1, 2, 3, 4. That's it. And that's how you get 4 standard deviations. Or you could just use like this one here on TradingView, JMF Tattoo. Where is it at? Standard deviation channel V1, JMF Tattoo on TradingView. You could use that guy. Yeah. So that's all good and dandy. $11.50 is about 12 o'clock. Yeah, I mean, guys, like I said, I mean, I know I say a bunch of things and I try to be as clear, concise with my thoughts as possible, but you know, it's looking like we're going to go get our 94,000 to 93,553 target on the downside. Because, again, it just doesn't look like our support is just strong enough to hold. Not to mention here. So think about it like this, too. So if you think about where all the support had been built over the past day, it was all around the 30-minute volume-weighted average price structure. So, right, we bounced it. This was shy. That pretty much is a bounce, and we just took it out. So we've effectively taken out the level that created every single one of these bounces for the most part, right? And now that's been, so it's like everyone buying these dips is pretty much, they're done for, right? Now, we kind of use the 4-hour trend as a target to the downside, but if this doesn't hold and it keeps sliding, what's next? It arguably is going to be down into like 94,000 to 93,500, right? I don't see anything differently. That's just kind of the way it is. And now we will start talking about the opposing arguments, which are if the market, whether before those additional down targets finds support or not, or whether it comes off of some of these down targets and then wants to do a little bit of a bounce, we're looking at more of a counter trend bounce back to target. So this is where I would do something like this. Take the last high here, maybe even the roll down here, and maybe even this candle, just based off the way it looks. It's not, I normally wouldn't use 3, but just the way this is feeling, I might have to. But this is our counter trend zone on the 30-minute, which could take a while to play out. But just like we saw yesterday, see how the market bounced up, and then eventually it broke down and went and got target. So same thing, when the market wants, when it finds support, whether it be here, maybe a little lower, maybe a little before, then it starts to bounce up, we're arguably going to be looking to backtrack this zone. Now, this zone could be all the way down here later, right? It doesn't have to be here. It's just there now. And that's on the 30-minute. I don't normally go too much shorter than the 30-minute. I mean, I do look at some 5-minute stuff, some 15-minute stuff, but it's not as, you know, they just chase down faster is all. So if we look at, like, say, a 5-minute, right? And again, I'm not a big fan of using a 5-minute on Bitcoin by any means. But just, like, say we used a 5-minute. It just tells me that the 5-minute retrace for right now would, you know, maybe be, like, up here, right? Like, right there. But again, I don't really care for 5-minute charts. So I normally stick minimum 15, 30 minutes, 4 hours, things like that. So anyways. But yes, already planned for the retrace on Bitcoin. And right now my targets will be continuously updating, but for now they will be back to here. And that's literally, it's a good idea of what I do. I literally just track highs, the lows of every single move. So I know exactly with what someone did previously, right? So for everyone that's currently selling this move down on, let's say, the 30-minute scale, I know that if we took the market back up to here, 95,000 and 95,600, they're all cooked. They're all done for, right? Because we essentially will take in that leg that was just sold down, reverse it all the way back up. And just based on the way that people trade and get involved with the market and how volume works, again, most people that were short that leg couldn't be in. And I'll pause this for a sec. So, you know, if we go back to like, if you even go back to the previous top here on Bitcoin, yeah, if we go back to the previous top here on Bitcoin, you see this roll down and then the back test. See, like, this wasn't a perfect clean move to the 30-minute by any means, right? It went above that level, right? But just thinking to myself, okay, at some point we're probably going to backtrack it. It just lets me know, like, if this were to stop moving, reverse, pop up, like, how far may this go? And it would at least be back to like 96,000. So in this case, it's like, if it just stopped right now and actually went for like a little bit of a reverse, where is it going to go? It could easily go up to there. Oh. Hold on, I will be right back. Maybe. I don't know. Where's this at? Welcome, friends. Happy Valentine's Day. Happy Valentine's Day. You know, I didn't go golfing yesterday, but I kind of want to. I don't know if I'm going to do that or not. Indoor golfing, that is. It's too cold here in Michigan now. Happy Valentine's, yes. So I mean that's pretty much it's pretty much it for the day. I can't really say there's a whole lot more to cover. I mean, there's always something to say, but you know, it takes some time for things to play out and you know, go to the levels you say they're going to go to. It's not just always going to be perfectly quick. Yeah, I don't really know. I mean, I do know. markets are just meh, and we've hit great targets today. I mean, we've already nailed about 1,000 different targets for you guys today. You know, we could recover or review, but I guess there's really no need. There's a lot going on in this chart, I understand, but let's just do this. So the first suggestion was basically that you would target back to here, and then you would watch long here first. And then after all of that, the market's probably going to roll. We're watching market internals, and then this is the breakdown, and then the short target of the breakdown would be here. Your QQQ long target would be here. And then to Bitcoin, you had your short target down to, I don't know, somewhere like right around here. I don't know, something like that. Then we did recommend a little bit of a long bounce there, which didn't really work that great for the moment. And now it's pretty much continuation targets for Bitcoin down are here and here. And at some point, counter retraces obviously like up to here, but that's kind of fugazi. So I think we've done a pretty solid job there. We've nailed a lot of ideas for you guys today. Very pinpoint. It's very good stuff. So anyways, I think we'll call it there for the day. That was fun. Hope you guys enjoyed. Tomorrow and Friday, I'll be back on here with you guys, same as I was today. And then after this week, I will not be, unless I decide to stream sometime in the afternoon. But again, at that point, most of the fun stuff's already happened. And at that point, it'd really just be a simple review of all the things that already happened on the day. You wouldn't really get much foresight analysis there. It'd really be a review of the things we already mentioned could happen. So I guess really at the end of the day, if you guys are interested, links in the description. You can always join us private. If not, I'll be back on next 2 days, and then hopefully in the future incorporating some sort of maybe afternoon stream for you guys. But other than that, you guys take care and have a great day.